Alright, my friends, here is the moment you've been waiting for. Dun dun dun. This is the F pattern, is what I'm introducing to you now. This is, basically the core of my intraday, tactics. An F pattern is basically an intraday breakout pattern, that can happen at any time of the day. I actually have them categorized in, three different sections that I'll be going over just kind of based on time frames. But let's kind of look and see, why learn the F pattern. Basically, an F pattern is just an intraday breakout pattern, and a lot of stocks that are on the top gainers list, they don't just all of a sudden rip up out of nowhere. Before they make those huge rips, a lot of times, they form up an F pattern first that actually, you get that signal of that, intraday breakout happening, which leads to, that huge daily gain. So, F patterns are definitely very worthwhile to learn because, they're usually the beginning of, some of the stocks that are on the top gainers of the day. A lot of those had F patterns before, they made the bulk of their move. So learning the F pattern is a definite must as, short-term momentum day trader. In addition, in the Foos 4 DVD, obviously, as you know, I never mentioned the intraday chart once. And, that's fine for, full-on swing trading strategies. But, the market has changed, I've changed, and you need to be, much quicker than the next guy, and you have to know intraday strategies to be able to do that. And because every daily candle, when you look at it on a daily chart, you just see one candle per day, but every one of those candles has a whole nother story written within it that you can profit from those opportunities. So let's take a look, just a real quick example here on JKS. This is the stock that blew up today. There's a couple catalysts here on JKS. You can see this thing had initially broke out down here of a mini revival pattern, but it's been kind of grinding the 13 EMA, and today it actually broke down the 13 EMA. So it's a potential sign of a reversal there. Right as it was breaking down the 13 EMA. But quickly, this thing actually, as you can see here, made a red to green move with a spike in volume. So, that was kind of an indication there. There was that bounce up the 13 EMA. It got that red to green move. So, that was obviously something potentially going on. And then it actually formed up an F pattern. F pattern, we'll be going over this more in detail, the anatomy of the F pattern in a little bit, but this is basically an F pattern. Same kind of thing as one of the Foos 4 patterns, but on a much shorter term time scale. We basically got a red to green move. That was just kind of little cream on the cake there, but we got a spike up in volume, consolidation, followed by a breakout on volume here on JKS. So if you can see here, if we zoom in, you can see here this is what it looked like pre-breakout. We spiked up on volume here, phase 1, consolidation. Once this broke out here, right above that neckline, we got a huge spike in volume here, all the way up to $4 per share, over 4, breaking over that whole number resistance, and this thing just ripped almost $1 before finally breaking down the 13 EMA up here. But we went from about 384 up to about 465 there. So F patterns, they basically, much of the top gainers, this was a stock on the top gainers list today. And how did it start? It started out with an F pattern. So, learning these F patterns is, highly important to, capitalize on these short-term moves and also just be able to identify what's going on rather than, say you were just blind over here and didn't even see what was going on. All you saw was just this daily chart. You don't get to see that, actual breakout happening on the intraday scale. You saw the bounce off the 13 EMA, but you can actually pinpoint entries and potential exits when you're actually looking at the intraday chart as well. So it's highly important to learn what these F patterns are. And F patterns, regardless of what the daily chart is, if there's some kind of news out, the stock can have, anything going on before the actual stock creates, an F pattern. And this stock can actually, blow the hell up, But, I don't go around searching for F patterns all day long, just, looking for the quick pop and getting out of here. The goal of this whole entire strategy is to find stocks that are breaking out of F patterns that are either potentially getting ready to break out of a Fus 4 pattern, have already broken out of a Fus 4 pattern, or are potentially post breakout of a Fus 4 pattern, and I'm potentially adding to a position or something. So the goal of my strategy is always still based on the Fus 4 strategy. I'm looking for gold revivals, survivals, and force patterns still, but I'm using these F patterns as well to kind of pinpoint entries and exits and whatnot. So I'm just using intraday patterns to kind of hone my skills based around the Fus 4 swing trading strategy. All right, so up next we're going to talk about time frames. A lot of people ask me what time frames do I prefer using. In the mornings for the first 2 hours of the session, I'm definitely using 2-minute intraday charts. These will give you a nice little view of potential F patterns breaking out. Usually in the first 10 minutes, an F pattern, even sometimes shorter than that, will start forming. And on a 2-minute scale, you'll start to see that chart formation forming. On a 5-minute scale, you're only getting one candle per every 5 minutes, so it's a little bit harder to read kind of the formation of a potential F pattern that's potentially going to break out. But this is a little bit more lenient strategy. I usually use it later in the day, or if I'm looking on a multi-day scale. And also, if you're following the 13 EMA, the 5-minute 13 EMA is definitely going to be lower than the price action, so it's a little bit more lenient trending intraday chart. So you might not see a breakdown of that 13 EMA on an intraday scale as soon as you would on a 2-minute intraday. Also with F patterns, there can be multi-day breakouts. Mainly what I'm looking at is this: what's going on today. On a 2-minute scale at the open of the market, I'm looking at what stocks are moving on momentum. What news is out, what's going on. Let me find some F patterns that are potentially, in conjunction with a very bullish news piece, and hopefully finding a stock that's in a combination with a Fus 4 pattern, so that it could be a potential swing trade that I'm, confident in. But these F patterns, which I'll be going over here, kind of the anatomy of them in the next slide, they can, they don't have to be on just one day. They can form over multiple days. But if you're looking at a daily chart and you're looking at 3 candles on the daily chart, you might not see much there. But if you go ahead and look at the intraday chart, there might actually be some kind of a triangle formation shaping up to be a potential breakout. So, always be also looking at multi-day breakouts as well, in addition to just a one-day intraday breakout. So, here's the anatomy of the F pattern. Basically, it's essentially, a Fus 4 on a shorter term scale on the intraday chart. So, basically, obviously, phase 1, you see some kind of momentum. The stock's going to be rising on volume. That's typically, either just some kind of technical breakout, or sometimes it can be news, which is usually a very bullish thing. It's always nice to have some kind of a catalyst, kind of pushing that stock. A lot of technical breakouts. Sometimes, if it's just technical, there's nothing to kind of, verify why it's breaking out. When there's news out, that kind of provides momentum going forward. So once the stock breaks out, more and more people are seeing it, and then they see the news and they're like, oh shit, maybe I should be getting in this as well. This is big news. So new stocks obviously have more momentum than stock that doesn't have some kind of big PR out. So obviously phase 1 is this some kind of spike in volume. Something's creating some kind of hype. Phase 2 obviously is the consolidation period. Phase 3 is the breakout in volume, where either the stock just gets a quick spike up, or it continues to ride a trend on whatever interval you're looking at. I prefer 2-minute and 5-minute. It's up to you, whatever you want. You can kind of get a feel for it. You can do 1 minute, 3-minute, 10-minute, 15-minute, 30-minute, hour. It's all personal preferences. I personally use 2-minute and 5-minute. More so 2 minutes over 5 minutes. So let's kind of go over the rules of the F pattern. Obviously, as I said over here, prefer the 2-minute chart, 5-minute charts on longer term scales. Rule 1 is wait for the setup to form. A lot of times people will see some kind of news piece on a stock, the stock is gapped open or something, and they'll just buy in right away before any kind of formation is formed. And a lot of stocks that gap open or kind of open up with a lot of momentum, they can quickly reverse. So somebody might buy a stock that all of a sudden sees some kind of gap up and the stock gets momentum, and they don't wait for any kind of formation to form up before kind of getting a clear basis for entry, and the stock might just continue to drop from there, and they just eat it. And I've done that many a times on some kind of news piece comes out, and I'm thinking this seems like it might just completely rip here. For example, let's take a look at KGN, this stock that just kind of never really gave you a chance to get in. This thing kind of a short-term F pattern, but it had some kind of news out, and this thing just kind of ripped all the way up from about 325 up to 376. It had a very, very short-term F pattern breakout. So this actually did have an F pattern breakout. So this is a bad example, but this is a good example of an F pattern. You can see this thing had that first initial spike on volume, kind of formed this initial little mini triangle pattern. This is the 2-minute chart. As soon as it ripped that high of the day on this mini triangle F pattern formation, this thing just went from 340 all the way up to 376 before eventually breaking down the 13 EMA upwards of around 370 on the 2-minute chart, and it is kind of traded flat in a range from there. But that's the anatomy of a F pattern right there. This one actually did kind of get an F pattern. I thought I looked at it before and it didn't, but it's a good example of an F pattern regardless. But let's take a look at the rules again, coming back here. First and foremost, wait for the setup to form. Don't jump the gun on these things, especially on some kind of news piece. If you're buying into a FUS4 swing trade pattern, and you see a stock moving and you're seeing it break out above a FUS4, a lot of times I kind of disregard the intraday chart sometimes, because I know that the FUS4 pattern is more of a longer term position, and this stock might actually geez, somebody's texting me over here. And the FUS4 pattern is a longer term position, and it can definitely see some breakout to the upside on a multi-day scale. So intraday wise, it's not that important. But when I'm looking at an intraday chart, this is what I'm looking for. I'm looking for some kind of F pattern, triangular breakout for me to buy into. So wait for the setup to form. Rule 2 is, if you're seeing it kind of form up here, I prefer to try to get in right before it breaks out. Somewhere around here, and then try to predict that breakout. So I'm not trying to buy into it up here and potentially seeing this thing crack to the downside and only just get a short-term pop. I definitely always, can and do buy up here, but my preferred strategy is to kind of, see the formation forming up here and get in before it actually starts to break out here on the F pattern. For example, let's look at Kirk's. Oops, we're not on the wrong slide. Trade from today was KERX. Made a quick 500 bucks here on KERX. If we look at the intraday chart, we got that first pop of the morning, forming up here. This is on the 2-minute scale. The stock kind of forms up, right in the 13 EMA a little bit, and then I started thinking about right here. Looking back, let's zoom in a little bit more. Once I saw this kind of spike back up here, I started thinking about, hey, this looks like a potential F pattern formation breaking out. The daily chart, this was actually a FUS revival pattern that initially broke about 220 and then started continuing to ride the 13 EMA on the daily chart. So I saw this pop this morning. It had news out, And I said, this definitely looks like a potential F pattern, but it starts to break out above this, 288 to 290-ish level. This could definitely see potential rip towards the next whole number resistance, which was $3 per share. So I eventually, I actually started getting my order ready right here. I would have liked to get in around 287 and 289, but actually didn't get in until 290. And then this thing popped up near 3. It didn't really do much from here. If you look at the daily chart, the stock got completely hammered today. And if you actually look at the Dow today, the market's ate in it completely the last 3 days in a row. So there wasn't a lot of momentum going for breakout trades. But with the F pattern, you can definitely take advantage of short-term scalps. I got in at 290, scalped it, got out at 295, made about $500, and then this thing actually broke down the 13 EMA. And so this was kind of my sell signal right here once it just started kind of consolidating and it didn't really do what I was wanting it to do. So I got out at 295, just playing it safe. It was up near that $3 whole number resistance. So I didn't see that much more upside potential. And then this thing completely collapsed, ripped above 3, and then just completely ate it into the close. But I prefer, if I'm potentially only scalping, I'm just looking for that morning pop, and I'm in and I'm out within the first hour or two, and that's all I want to see. If you buy the stock pre-breakout, the stock might never break out. So same thing kind of goes with wait for the pattern to set up. But like I said in rule 2, I typically like to try to get in and predict that pop. But with doing that, that stock might never get that breakout. So if that stock never breaks out, you never get that confirmation of the F pattern actually going forward. So be cautious. It's very cautious if the stocks start to drop below the 13 EMA on any of those intraday patterns or time frames. Depending on what you're looking at, 2-minute or 5-minute chart. If that 13 EMA starts breaking down to the downside, or if you were able to draw some kind of a ascending trend based on the chart formed, a breakdown below there. If the stock never even broke out, that's definitely an indication of maybe the stock just had that short-term momentum right out of the gates in the morning, and that's all it's going to see. So definitely be cautious with buying pre-breakout. That stock might never even break out, and so you need to protect yourself if there's a major trend reversal on that stock. Rule number 4: once the stock breaks out of the F pattern, if it drops back below it, say we break out above it, if we just all of a sudden just get hammered and drop back below this line right here, there's definitely a potential for it to be a false breakout, and that stock might not actually be going anywhere. So, sometimes a stock might break out a little bit and it might be a little choppy, and break down below it slightly on on this breakout pattern, and then all of a sudden rip back up for a secondary move. And you might have got stopped out down here because it just briefly broke down, but it might have just been some intraday volatility, and then it all of a sudden rips back up. So no pattern is perfect. It happens a lot, but that's your first indication of this stock. Maybe this F pattern isn't going to break out, and we might actually see some kind of reversal here. So be following the 13 EMA. If it breaks down both the neckline and the 13 EMA, that's a potential sign that maybe it might be wise to play it safe and get out of this position. But on the other hand, that's not always the case. It's market's volatile. Things are going to happen. Not every breakout's going to work out perfectly. For example, let's check out a stock that I failed to trade correctly because I took my loss or got stopped out too soon, and then all of a sudden the stock completely ripped. But first of all, let's just look at the daily chart here. This is DCTH. This is a trade from just early last week that I only lost, I think like $25-50 on, but I could have made over $2,000 on this thing. But since I played it safe, I got stopped out early, and I didn't capitalize on it because I was following that intraday F pattern chart. It broke down, and I stopped out for trying to play it safe. But let's look at the chart here. First up, we're looking at the daily chart here. We got this breakout above this revival pattern. You can see the lead-in trend. We formed up this triangle pattern. We got that first initial run up on volume, followed by this consolidation. This is kind of a symmetrical triangle breakout, and then we had these big spikes in volume leading into this breakout. So that kind of gave me an indication of potential momentum going forward. If we look at the intraday chart, rolling back here, we'll see why I was initially buying in. So first off, this is what happened right out of the gates in the morning. We got this spike open here on DCTH, spiked out at 190. This is actually on a 5-minute chart because I can't go to a 2-minute chart this far back. But the 5-minute chart actually works out pretty well on this because it gave you a little time for it to form up. But I was watching this thing gap open. First, there's that phase one. There's momentum, volume. This stock gapped open from about 182 from the previous day's close up to 190. So got a nice little spike action going on here. From here, it starts consolidating. Hit the 13 EMA. Now we got this kind of flag pattern formation. At this point, I had seen the stock. I'm looking at it. I'm talking about it on Foos TV, saying, hey, check out this stock here on DCTH. We have a potential F pattern forming up right here, and it's also in conjunction with this overall daily bullish looking potential breakout here on the daily chart. So that's the combo that we're looking for, is being able to combine the F pattern on the intraday scale within a chart that also has a potential Foos 4 pattern on the daily chart. So just using that combination together, and I'm using the F pattern intraday charts to kind of pinpoint my entry and kind of see and kind of gauge whether or not this stock might all of a sudden rip above this breakout point. So keep going forward here. All of a sudden we hit this breakout. I get in 190. I think I had 9,000 shares on DCTH, and I'm thinking, all right, here we go. Here's the breakout. This could definitely see a big upside rip, at least towards $2 per share, and hopefully higher from here, because $2 is the next whole number resistance. And previously on the daily chart, what do we spike out here? About 194. So going forward here, all of a sudden at this point, we broke back down below that neckline. As I said in rule number 4, if the stock breaks out down below that neckline, that's a potential sell signal. It also broke the 13 EMA. At this point, I got a little spooked. The market was, a little sketchy. I ended up selling at 189 for a penny loss from my 190. So, I sold for a very small loss. I was protecting myself from, further failure on this stock. But, a lot of times in these cases, when I'm way too cautious, I miss out on big opportunities. The only upside of that is, I protect myself on major losses at all times. I hardly ever have big losses anymore. So my account never really gets any kind of major damage done to it. More so, I'm just missing out some big opportunities due to volatility and playing it very safe. So there's upsides and downsides to playing it safe. On one hand, I'm not doing much damage to my account whatsoever, so I'm not getting hurt, and that's the only reason why people fail, is because they do damage to their account. They don't fail because they let a stock rip. If you can't accept a loss, you're gonna lose. So you have to be able to, at some point, say, this is not working out. I need to get out of the position. Unfortunately, in this position, DCTH, this quickly revamped, broke 190. I didn't pull the trigger on this as it rebroke, and from here, this thing just ripped it up. Came back down, retested the 13 EMA on the 5-minute chart. Broke down briefly. No pattern or trend is going to be perfect. They're just kind of a gauge. So obviously, as you can see, this broke down the 13 EMA slightly, but kind of rode and grinded out of this area. And also, if you're looking at a longer term hold, the 13 EMA on a 2-minute and 5-minute chart are going to be broken to the upside and downside, multiple times on a regular basis when you're looking at a swing trade. So the 13 EMA on the intraday scale is just for short-term indicators. If you're looking to potentially scalp or get out of a position, very quickly. But as you can see here on DCTH, this closed at highs of the day, actually had a solid later stage breakout. When a stock closes at highs of the day, that definitely has some sort of indications of, momentum going forward, which we'll talk about here on the next slide, which is an F3 pattern. But as you can see here, DCTH, actually the second day had a secondary kind of F pattern breakout, had momentum right out of the gates in the morning, or hit that 13 EMA on the 5-minute scale, then ripped again, and then, peaked out again the next day, and then kind of gapped down. If we look at the daily chart, now it's just kind of consolidating, so waiting for the 13 EMA to catch back up, and it might potentially continue to rip higher. But this was a perfect kind of combination of the F pattern breakout along with the FUS4 revival pattern. Unfortunately, that F pattern was just a little bit volatile and broke back down below that that initial breakout point, and I got stopped out. So it happens, but that's your first indication of a potential false breakout, and you need to be able to accept that losing is a big part of this game, and you have to be able to accept a loss. All right, now rule number 5: as long as the stock is trending the 13 EMA, regardless of what time frame you're looking at, depending on the 2-minute, 5-minute, maybe even you want to stretch it out to the 15-minute. As long as that 13 EMA is trending, there's really no telling how high the stock is going to go. So, after the breakout of any kind of F pattern or FUS4 pattern for that matter, my typical goal is to ride the 13 EMA as a trend. It's not always easy to do that due to just volatility, but there's really no telling how high a stock can go. As I have illustrated here, a stock can typically once it breaks out of an F pattern, it'll typically ride the 13 EMA for an extended period of time before finally breaking down, which could mean a potential trend reversal. That might just mean a short-term breakdown in the trend, might trade flat, might reverse, might just be a false breakdown and continue to rip up. It's hard to say what will happen, but the 13 EMA is definitely a good trend indicator following an F pattern breakout. New rule number 6 is once the F pattern breaks out, a breakdown of the 13 mean basically what I said before. It was just reiterating, once that 13 EMA is broke down, that's definitely a potential sign of an intraday reversal, at least short-term wise. When you're swing trading, moving on to rule number 7, basically, when you're swing trading and you're trading F patterns, in addition to that, you kind of want to use an F pattern as an indicator of potentially where you're going to enter into the stock, and maybe lock in a short-term profit on a breakdown of an intraday 13 EMA. But if you're looking at the actual swing trade from a FUS4 perspective that I talk about in the original DVD, the 13 EMA is going to be broken down several times on an intraday scale. Let's take a look back at DCTH here once again. Looking at here on the 2-minute or 5-minute scale, once this bird, this rode the 13 EMA fairly well on the 5-minute chart here, but another one was OTT. This was one that actually was a great looking revival pattern. You can see here the lead-in trend was bearish, formed up that first initial spike here. We got spike with volume, phase 2 consolidation, and in phase 3 we just broke out around $2 per share. It just completely ripped up towards over $3 per share. But as you can see on the intraday scale, this is a 5-minute chart. This initially broke an F pattern right here at about 207, maybe 208. You zoom in here. This is a stock that I actually just barely missed my entry on. But basically, great looking F pattern here. If we go all the way back, or it looks like they're not going to let me go back that far on a 2 minutes time frame. So we'll have to look at the 5-minute. But basically, got that first initial spike. This is the opening day, candle for this price action here. So looking at the intraday scale, it had that short-term consolidation. Looking at a 2-minute chart, there's going to be twice as many candles here, so you're going to have a better view of that F pattern. This software does not let me go back that far in a 2-minute scale, but basically it's the same thing right here. It's that first morning spike consolidating, and then once that high of that flag pattern breaks, that's that F pattern breakout. It basically ripped about 10 cents right off the bat, and it was in formation of this revival pattern. So it was definitely an indicator. I actually did not see this happening, and I barely missed my entry right here on OTT. I actually threw out an order at 223 right here as we were looking to kind of break out above highs again. We actually broke out again here, got a little crazy on this stock. It's a low floater, but I wanted to get in again here at 223 as we were in a great looking revival pattern. So I was more focused on the daily chart here on OTT rather than a small little breakdown on the intraday chart. So it's kind of hard to gauge which one to be more focused on, but I was more focused on the swing trade aspect because this revival pattern was just so beautiful and there was a lot of upside potential. So a little breakdown here wasn't that big deal to me. I was actually looking to get right back in at 223. I threw my order out for 8,000 shares. It just barely missed, and all of a sudden just spiked up huge, very quickly, about 10 cents over my buy price. And so I just didn't chase it. I didn't get that exact entry I wanted, and I hesitated and wasn't able to get in again on this stock. And this thing just ripped from about 220 right there all the way up till $3 per share and higher. But like I said, intraday wise, sometimes a reversal is going to happen. This was an indicator of a potential breakdown. Didn't happen, but broke right back out, and then it finally did break down the 13 EMA that same day, and it had that intraday trend reversal all the way back down to 222 from up to 250. So the intraday charts are going to be very volatile, but when you're looking at it a swing trade perspective, that was just first day of the breakout on OTT, and there was definitely more upside potential when you're looking at it from a perspective like this. This is first day of a revival. There's definitely more upside potential after day one of a revival pattern breakout. So looking at the intraday, we did reverse, but then following the next session, this thing ripped out once again and continued to break out here, and then actually gapped open on the third day, which was today. And check out this pattern that happened today. Once again, another F pattern breakout. Let's break it down to the 2-minute chart here on OTT. Right out of the gates this morning, I definitely would have traded this if I would have saw it. I was too focused on KERX, which is one that I was just talking about. I traded that pattern from about 290, 295. This one actually ripped a lot more than KERX did, and then actually just formed this huge shooting star candle. But this was the same thing here on OTT. The stock had a lot of momentum going for it. Looking here, here's the opening price, gapped open, started spiking out and peaking up around 290, 291. So at this point you can see this and say, hey, there's a lot of momentum on this stock. It's reaching that $3 resistance, which is the next whole number, but could see a definite spike here as a potential scalp. As soon as that broke 290, this thing ripped almost 20 cents momentarily up to 308. Continued to break out here. Eventually broke down the 13 EMA at 3, but you could definitely have taken advantage of that quick F pattern pop right there and locked in some profits. I didn't see it happen, so I did not get into this stock. And then actually had to try to break out of a later stage F pattern, but failed. As you can see here, once that stock breaks out to the upside, and if it fails, that's definitely a sign of a potential trend reversal. So in this case, a later stage F pattern breakout, which we'll be talking about as well, F2 and F3 patterns. Once these things try to break out and they don't, and that trend reverses, they can definitely see a potential big breakdown in the stock. So once it tried to break out new highs again, it failed. That was a potential sell signal, and now this thing just completely got hammered into the close, and still closed up 2.5%. But a huge intraday spike. This also had to do with the market that broke down today. The market was down 130 points. So trying to trade intraday breakouts and breakouts in general when the markets are having big red days like this, it's hard to have very much luck, and you need to be, very quick with taking your profits on those trades. But anyways, that's kind of, the anatomy of the F pattern, and now I'm going to kind of go over, just a bunch more examples of just some more F patterns. All right, but before we move on, I almost forgot I got to go over the kind of intraday time zones, which I'm basically, categorizing in three different stages: F1, F2, and F3. F1 is typically where, this is where probably 90% of my new trades are made. During the stages F2 and F3, I'm not doing much in the market. I'm kind of just monitoring whatever position I may have. I don't typically buy many stocks in these next two stages of F2 and F3. Typically being, F1 is usually where you're going to find, a stock that is just starting a breakout, just out of the open. That means there's the rest of the session for that stock to make its move. In F2, this is typically a stage where, everybody kind of got over the morning hype, what news was out, what stocks were ripping. Usually in the first 2 hours, stocks make a big spike up, and sometimes they spike back down after that, and that's the only thing you get. So, the majority of my money is most definitely made in the first 2 hours. Sometimes if I'm just feeling like scalping and day trading, I can just trade the first 2 hours, and that's all I need to do the rest of the day. A lot of times that's, when you're only going to see the biggest moves of the day is right out of the open. During F2 stage, or F1, it's the first 2 hours, 9:30 to 11:30 a.m. That's Eastern time. I'm actually on the West Coast, so for me, this is 6:30 a.m. to 8:30 a.m. F2, this is kind of lunchtime, kind of downtime. Everybody's kind of absorbed, whatever news was out today, whatever movements the market's made. Now everything kind of just relaxes here in F2, 11:30 a.m. to about 2 p.m. But these F2 patterns definitely still breakout charts definitely still form during this phase. Sometimes it could be a F1 breakout that is actually forms up an F2 pattern, a later stage breakout after an F1 was broken. Maybe it's just a stock that just kind of consolidated for a while, didn't really do anything during the opening, but then finally made a breakout during this time. So it does definitely can happen during the middle of the market session. It's just the least action is going on during this time. During F2 is when a lot of people make trades out of boredom, which in turn are usually not very actionable trades because there's just not that much going on. And so a lot of people fall into boredom trading, which leads to stupid trades, thus making poor decisions that can easily lose you money. And just it's a lot of wasted time. I'm definitely still monitoring stuff, looking for trades that have potential, but F2 I'm fairly quiet for trading. F3, this is usually when people start kind of wrapping up the session, the last 2 hours, and kind of figuring out what they're doing with their positions, if they want to buy into something leading into tomorrow. And F3 is basically an F pattern breakout that's breaking out into the close. A stock that's breaking out near highs into the close, that typically means there's a lot of momentum going into the following session, and that definitely could mean a potential gap into the following session. So F3 patterns, if you're holding something you bought in the morning, all of a sudden it's just ripping high, so maybe potentially formed another intraday triangle into the close and broke out, that's definitely a good sign for your position that there's momentum going into the open, because there's a lot of buyers and buy interest into the close. That's going to pop up on scanners. People are going to now research that stock overnight, and people are going to potentially want to get in on the following session. So F1 and F3, these are definitely the times when you want to be most critical about being around the market. Preferably F1 right at the open is first 2 hours, even first hour, sometimes even first 40 minutes. After the first 40 minutes, I'm almost done. It's like, well, I didn't find anything today. I guess I'm kind of sitting back and waiting to see what else it is. So F1 is definitely the most important trading hours for me to figure out what stocks are moving today, what news is out, what stocks can I get into. So just going to look at a couple examples of stocks today that made moves, and some that broke out of F patterns that worked, some that didn't. And let's just take a look here. What is today? Today is October 11th. Here's JRCC. This is actually a revival pattern. Coal stocks in general made big moves today. This is actually a fairly volatile stock. It actually broke out right out of the gates this morning. Oops, I need to do that. On the 2-minute chart here. But you can see it ripped right out of the gates this morning, just spiked up and then spiked all the way back down. So it was a very volatile stock, but ended up breaking out. I didn't get into this stock. It was a little bit too crazy. We had some weird action going right around here in the morning, but it actually did form up this F3 pattern and broke out right into the close, which basically means that there's a lot of momentum going for this into tomorrow. And it's also got a pretty decent looking revival pattern here. We got the lead-in trend. The daily chart is in revival form. It broke out, had volume confirmation. So definitely potential for this to continue forward tomorrow, being that this was an F3 pattern. Breaking out into the close typically means that there's going to be momentum into tomorrow. And in addition, this is in a FUS4 revival pattern. So a pretty decent looking chart here overall on JRCC. But that was a great example of a F3 breakout into the close. Next was ROSG. This is one that I had traded several times. I was trying to trade this revival here, breakout. I got in on this day, was hoping to see this thing just rip up to the upside and get a nice move here, but it eventually just got only one little spike here. I ended up making about 3,800 bucks on it, on ROSG, and then came back down, broke down below that support line, which kind of made it, looked like a false breakout, which it actually was. So I wasn't in it on this pullback. I actually sold this one day as it started pulling back, looking like a false breakout here on ROSG. But today, it had sold off, and all of a sudden today it just spiked up here. It looks like it had some news potentially out this morning. Yeah, it looks like the new management team or something, just whatever it is, any kind of news can create some kind of hype. But right out of the gates this morning, this gapped open on a big volume. So I actually didn't trade this at all. So I miss a lot of trades. There's lots of opportunities out there. It's just a matter of seeing them and being able to be there at the right time. But this is a perfect F pattern breakout. As you can see, we spiked up on volume. This is the 2-minute intraday chart. Let's zoom in just a little bit more here. So at this point, you can look at this stock and say, hey, this is potentially forming up F pattern. If we break out above the highs of this candle that is forming up here about 545, that could be a potential trigger. So going forward here, as soon as this broke, we got increased volume, got a little volatile, coming spiking up and down here, but overall held the 13 EMA the whole time, and then all of a sudden this thing just ripped from about 545 up to 610 in a very short amount of time, before eventually breaking down the 13 EMA and the 570s. But that would have been a good sell up near 6, which was the next whole number resistance. And this thing kind of just trended before falling back down kind of lower into the close. So the daily chart here looks like crap. Our ROSG typically sells most of its daily gains. But that was a perfect pop in the morning. That's why the first 2 hours is so damn important to be around, because you can just take advantage of these quick morning pops. If it's a great looking swing trade combined with a FUS4 pattern, potentially hold it and have it be a swing trade. But just on a pattern like this, where there's not really much going on here other than it had been selling off for a while, had a little piece of news out, that was definitely an opportunity to scalp this trade. If you were there at the right time. But the pattern was there. It was perfect on ROSG. Let's see what another one was. More coal stocks that blew up today. This was kind of revival / survival pattern. This was a revival breakout right here, and then kind of spiked up, failed the breakout, came back down, consolidated once again, and then broke out again today as coal stocks really ripped. But the same exact pattern here was this morning F pattern breakout. Here's the opening bell. On the 2-minute chart, this thing spiked up. Wait for the pattern to form. Don't just buy into a stock because it's all of a sudden gapping open. It's key to wait for that pattern to form before you really know what's going on with the stock. And here on ANR, there's the breakout, the F pattern. This thing just ripped, rode the 13 EMA all the way up from about, what is this, about 766. Finally broke down the 13 EMA at about 820-ish. But if a stock breaks down the 13 EMA on any given time frame on an intraday chart, it doesn't mean that much. As for ROSG, it meant a reversal, and this thing kind of like came back down. But if you're swing trading, the stock, like I said before, a stock's going to be breaking down up and down below the 13 EMA on intraday charts all day long. As you can see, ANR did it all day long, and then eventually closed at highs. So it's just kind of an indication of if you're scalping a stock, or maybe this stock might be a false breakout. So it's just kind of a warning system, just to say, hey, there could be a potential reversal here. So start thinking about what you're doing and how you want to manage that risk. But as always on the FUS4 chart, on a daily chart, we're looking at a 13 EMA on a daily scale. On a daily scale, this stock's 13 EMA is at 713. The stock closed at 855. So obviously, that's significantly lower than looking at a 13 EMA on a 2-minute chart. But that could have been easily just a quick, good day trade there. But this did close up near highs, so it's definitely a potential that this is going to have momentum going into tomorrow. There will probably be a gap open. What was another one? ACR, another, or not ACR. Yeah, it was ACR. ANR. That's what I'm looking for. Or did we just look at this? ACI. I don't even know what we're looking at. These are like the same exact charts. So ANR, same exact pattern as ACI. Maybe we just looked at this. ACI here. Yeah, same exact pattern. Both F pattern breakouts, both coal stocks did the same exact thing. Here's ANR. Starting out with that F pattern rip, and here's ACI starting out with that F pattern rip. Both broke out very strong, but like I said, great thing about learning F patterns is that a lot of the stocks that make that are on the top gainers list, they start their day out by forming up an F pattern. A lot of them don't just all of a sudden rip and just go straight up. There is that opportunity to identify that F pattern, as you can see here on ACI and ANR. And there is another one, CLWR. This one was just a crazy stock today. This actually had 2 F patterns. This was one that I was talking about here this morning at 170. There was a huge gap open, so I was a little bit hesitant about getting in, but I called it out saying, hey, check this out. If it breaks 170, definitely potential for this thing to have more upside. So it ripped a little bit, got up, to about 180-ish, so 10 cents. Up to 183, but kind of was chopping up and down below the 13 EMA, so it was just kind of a sketchy stock, but definitely had momentum. Then it broke out again of this other F pattern, this other triangular pattern here, above new highs, ripped from about 184 up to above 2, which is the next hold number resistance. That's where kind of got some more sellers in, but into the close, this thing actually got another F3 breakout here at about 205. So lots of momentum going forward on CLWR. So there are several different patterns that formed up. We got a F1, F2, also a F3 that broke out. But there was a lot of volatility in between, and trying to predict what the hell this stock is going to do after this breaks out, then comes all the way back down. There's no telling what one of these stocks are going to do. Lots of volatility. This broke out of this F2 pattern, came all the way back down, and then ripped up and then broke out. So could have been an opportunity to just sell into spikes, but definitely would have been a tough stock to just try to hold throughout all this volatility. But I think that was it for the stocks that I wanted to talk about from today. But that was just great example of looking at the different time frames of these F pattern breakouts and kind of just what they mean. F1, that's definitely when, like that we just looked at on ACI and ANR, they both started out with F patterns before making the bulk of their moves. F2, they do happen, but they're kind of boring. not that much trading action. And then F3, obviously, that's the later stage that we looked at JRCC as well as CLWR, and both those have a pretty strong momentum going into tomorrow's session. All right, now I'm just going to illustrate some other F patterns. These are the ones that I just captured some screenshots of as a couple weeks went by, just to show you some of the big rips here. And here's one was BIOF. This thing just absolutely ripped up 54% on this day. As always with the F pattern or any stock that makes a huge rip, a lot of the times there is that F pattern right out of the gates in the morning that gives you that opportunity to kind of set up for the potential entry, and potentially this stock is going to move forward. And most times the top gainers always start out with a F pattern. As you can see here on BIOF, this is the opening bell right here. It started out actually in the red, quickly went green as it crossed that yellow red to green barrier. Formed up this F pattern, is a pretty low volume stock. BIOF is a low float stock, so it can make moves like 54%. So it did create this F pattern, peaked out, formed that peak there. Actually kind of good to give you another earlier signal, down about 448 once it broke this kind of flag here, but it did eventually break that high there, and then that's where you got volume in. And from there, rode the 13 EMA on the 2-minute chart from about 450s up to about the 539ish. Retested 13 EMA right here. This is the 2-minute chart, so this was definitely a more shorter term 13 EMA trender. On the 5-minute, I don't have a screenshot of it, but it probably rode the trend much smoother here. But BIOF, closed huge on this day at 54%, and it all began with that F pattern breakout here. And then if we go to the next slide, looking at the daily chart over here, closed at 641. The stock ripped all the way up to 1080 following that breakout. When a stock closes at highs of the day here, like it did on that first initial break, there's definitely potential to see more momentum on that stock going forward, and this stock just completely gapped open and ripped up here on BIOF, but it all began with that F pattern breakout. Here's another one, CTIC. This was a stock that, a lot of these F patterns occur also as potential day trading scalp positions when they just all of a sudden have some kind of huge gap open on news. So that's the case that kind of happened here with CTIC. It did rip 2 days prior, but then gapped open big, did form this perfect looking F pattern breakout. I actually scalped this play, made about 500 bucks. I was in very quickly, and or got in right around here at the break. I only made about 10 cents on this thing before it eventually ripped all the way up to the 350-ish area. I think it actually went higher than that. If we look at the next slide here, or peaked out about the 350s, but that was that perfect flag formation, broke out, continued up, and just ripped after that F pattern break. Eventually broke down the 13 EMA, and then once that first breakdown occurs, it's there's no telling what a stock's going to do. I'm not psychic, nobody is. But it's just kind of an indication of a potential slowdown in the trend. And as always, that first 2 hours, you're going to see that pop into that first 2 hours. You can take advantage of that and potentially walk away if you want to have some more patience. Maybe the stock might continue to rip it up, but that usually first 2 hours off that F1 pattern break time zone, you can definitely take advantage of these quick rips right out of the gates in the morning. And then, as you can see here, the F2 and F3 stages, just not much really happened to kind of just chop back and forth. But in that F1 stage, when that F pattern first broke, it gave you a clear signal to buy, and it completely ripped right after that breakout symbol. On the intraday chart, the rest of the day, it didn't really give you any kind of clear pattern to trade off of. So I always like to be around for the F1 breakouts because they're the most predictable part of the day. Here's another one, DN. If you can see here, this was the opening right here. Actually did break out of an F1 pattern that quickly failed, came back down, but just because it breaks down 13 EMA doesn't mean that the stock's completely done. It just is potential that, hey, maybe this stock isn't going to do anything, or it might trend a little bit throughout the session and just kind of trade flat. This one did eventually form up a F3 pattern, so a breakout in the close, which usually means momentum going forward into the following session. And also on the daily chart, this was a revival pattern breakout. No potential push towards the next whole number resistance, which was also the gap fill at about 6. I was actually in here long at 521. Things were looking good, but as with trading, things don't happen always the way you want it to go. And so I ended up stopping out of this stock once it started breaking back down below the neckline of the breakout point. I sold it for a small loss, protected myself. DNDN is now, I forget where DNDN is now, but it's in the crapper. So you can see here, it did have that nice looking breakout, but failed, and now DNDN is all the way down at 435 current day. So you got to always protect yourself. Take that loss. It's not the end of the world. You can always move on to the next stock. And also, revival patterns, being that they're the most common of all patterns, that means that they're also going to be the most commonly failed ones, because they're the most there's the most abundance of them. So the more time you trade something, your odds are that it's going to fail more often than not. But there's definitely a lot of revival patterns out there that do make huge moves. Two of which that just happened was OTT. Perfect looking revival pattern, broke out about 2, ripped all the way up to 315. Here you can see the lead-in trend was very bearish, came down very quickly, broke out that revival, huge volume in here, got that first phase 1, followed by phase 2 consolidation that completely broke out to the upside. Another one was pure, P-U-R-E. Same exact pattern as OTT. This thing just ripped up another 24% today. So revival patterns, don't get me wrong, they do make huge rips when they actually rip. But like DNDN, wasn't as beautiful as looking revival as those last two, but did have potential. It broke the 50-day moving average. Unfortunately, this bearish trend is not over, and it continued to break down. So you have to be able to take that loss on those stocks that don't work out for you. Let's look here. Oh, there goes my. Hold on one second. All right. Back in action. DN, that stock sucked. MSPD. Here is another F pattern breakout. Similar pattern to CTIC. This was a new stock. Broke out, had just volume going for it. My computer's crashing. But volume was going for it, looking very bullish. Was also hitting this resistance here. Okay. Hitting this resistance here on this previous spot back around $3 per share. So, as always, whole numbers are going to act as resistance levels, but also once those areas break, that's a very bullish indication. So it did break out of this F pattern here on MSPD, but if we look here shortly after, see it broke out, had a quick spike up, eventually broke down the 13 EMA, so didn't get that morning pop here. So F patterns don't always get that breakout that you're looking for right out of the gates. So obviously every pattern is not going to work out the exact same at the exact way as the opposite one did. So you have to manage risk and be able to protect yourself. But this did actually later break out of an F3 pattern. You can see this continued to hold throughout the day, retested this previous high, got a little crazy. This stock was very volatile throughout this session, and into the close we actually broke out. So this is an F3 pattern breakout into the close, which signifies potential momentum going forward into the following session. If we look at the next day, this thing had another big breakout the next day, up 8.5% following that breakout. So this was a decent looking buy into the close due to this being a F3 breakout, in that potentially means momentum going into the following session, and that's exactly what happened here on MSPD. Got the F3 breakout in the close, and continued up right out of the gates in the morning, and rallied 8.3% to potentially capitalize on. Here was ECYT. This was a swing trade that I alerted here. As you can see here, this is the opening bell. We have this decent looking force pattern here on ECYT. ripping back above the 13 EMA on the daily, and potentially breaking out above this neckline. So I actually got long here, I believe, at about somewhere in the 820s. I was a little bit late here on this breakout. Didn't get in right where I wanted to. It was a pretty low float stock, but I loved the daily chart here. So I got in here in about the 820s level. Came back down, retested the 13 EMA here. And when I'm trading something that I really like on a swing trade level, the intraday breakdowns, on uh, the 13 EMAs, they're not nearly as significant. I still watch them, and a breakdown, on the intraday scale, definitely can mean a reversal and may have an influence on my decision. But I'm more so trying to play that overall FUS4 pattern. But my entry here, intraday wise, was based off of this morning pattern F breakout. And then here, we kind of just got a huge rip right out of the gates, retested 13 EMA, kind of just, we're flat along it, and actually added again as we were breaking out above highs, which was also the neckline breakout of this revival, or this force pattern. So I added in here in the 820s, then added it again right as we were breaking out of this high here, which was also the neckline of the daily chart pattern. From there, here we did get a strong close on ECYT, so definitely meant that there's going to be potential momentum going into the following session, and we did just rip right out of the gates into the morning, and I eventually sold right near the top for about $2,000 in profits in just 2 days of trading. So that was a perfect example of getting into a stock based on the F pattern prior to the actual breakout of the FUS4 pattern, and then locking in profits as that closed near highs, meaning that there's going to definitely be momentum likely into the following session, and I took my profits of about $2,000 there. Here's another one. This was another alert, actually. This is a survival pattern. A survival pattern is a stock that rips to the upside, gets a short-term consolidation down, and then forms kind of a mini triangle pattern. So on the daily here, you can see this breaking out above this neckline. On the intraday chart of that day, you can see that this stock actually ripped red to green here. We started out negative on this chart software that I use, TC2000. Like I was saying before, anytime, or basically the yellow line, they create it for you, which basically means the previous day's close. So if the stock is below that, you're in the red territory. If you cross back above it, you just went from red to green. So a red to green move here on GY at 820. Then we formed this kind of mini F pattern breakout here, and I got long right here in the mid 820s as we were breaking out of this F pattern, went red to green, and on the daily chart we were breaking out as a survival pattern. From there, we got a huge rip all the way up to close right near the highs. So this basically rode the 13 EMA. This is the 5-minute chart actually here we're looking at here on the 13 EMA. Closed near highs. I believe I maybe even just sold this day because I'm not patient enough to swing it, but we can see that this thing ripped all the way up to 1025 here not too long after. So it was a great looking survival pattern that turned into a really solid potential swing trade. Omex, this was another one that I tried to trade this kind of survival pattern, but we break out to the upside. Once that breaks back down below this neckline of about 80, that's a potential sign to get out, and I eventually did. This was actually that little F pattern right here on a longer term scale, looking at it, and this is the daily chart here. It turned into a false breakout. It looked good on the daily chart here, but then when we go forward, you can see it just eventually closed back down below that breakout, and eventually just had 2 days of selling right after that. So I got out here about 379 for my 380-ish alert there. Took a very small loss, and the stock ended up continuing to drop down and not breaking out. So if those F patterns fail right out of the gates, sometimes they might just break back down just shortly and then rip to the upside. But a lot of the times, if they don't get that momentum off that F pattern break out of the gates, that is a sign that the stock might be not breaking out. So I tend to try to cut my losses extremely short. All right, now here is another momentum F pattern one. This stock is just a stock that just completely ripped up here previously. So it was a former runner. Bounced off the 13 EMA, so it's still trending, and then on this day it had a great looking gap open. Got that first looking spike up here with volume. Looking at this stock, definitely in formation of a potential F pattern here. I actually scalped this stock for about 600 bucks, just in and out real quick. If we go to the next slide here, you can see once that F pattern ripped, this thing, went from about 387 up to 420 very quickly. So, you can make decent money just on these morning breakouts. But, on these stocks that are extremely volatile, like PSTI, trying to swing these is, can be very difficult because they move so quickly up and down. As you can see, this stock, went from 322 all the way up to 420, came all the way back down to 357. Next thing you know, we're back up at 412, 420. So, trying to have patience through all that volatility can be extremely nerve-wracking. So, stocks like this, even though you can make big gains, it's very difficult to hold throughout that kind of market action. So, but there are those opportunities. This was an F pattern breakout right out of the gates in the morning. Broke that F pattern right at 380, about 386. Ripped up to 420. I made about $600 very quickly just on this momentum stock. So stocks that have big gaps up, and also you can see stocks that have previous momentum going for them can definitely rip off these F patterns that break out. But you just potentially only want to scalp these things because they're highly volatile, and you can quickly turn your profit into a loss. RFMD, this is another one. This was kind of a mini revival pattern here. As you can see, it broke this horizontal resistance. It did gap open. As you can see here, perfect little F1 pattern that broke out at about 390. From there, ripped all the way up to 420. Basically, almost the same exact price action as PSTI. Ripped at about 390, ripped to 420. RFMD ripped at 390. Pretty much ripped all the way up to 420. This is on a 2-minute chart. Came down below the 13 EMA just briefly there. 13 EMA is never going to be a perfect indicator, so it's just a warning sign if that starts breaking down potentially to that it might be a trend reversal. In this case, it just barely broke down for a second before ripping back up, and then from here you can see on the daily chart there was resistance around the 440-ish area. That's about where RFMD spiked out before coming back down. But it all started here on this breakout. This moved up about 8% that day. It all started with that little F pattern. So that's why I love F patterns. That's why I'm teaching you all about them right now, is because that's what happens at the beginning of most of the major moves on any given stock. Not all of them, but a lot of them sure do have the F pattern to begin with. Here's another one, Rhombus. This is a earnings play. When earnings season is out, F patterns can definitely be very potent. As a lot of stocks, just all of a sudden gap open on earnings the day they release some kind of a positive earnings statement, and usually open up with a gap because that news is released pre-market, and those stocks can potentially make some big moves. RMBS reported earnings. It had this first huge spike right out of the gates in the morning. People got that news about earnings, ripped really quick, formed up this F pattern very shortly here on the 2-minute chart. As soon as that broke that high of the day, this ripped from about 540 up to about $6 per share, 60 cents very quickly. It never even broke down the 13 EMA up until about the 590s later into the session. On RMBS, I think we have a longer term picture. So this was the actual chart throughout the whole session. We got that's first pop in the morning. There's the first 2 hours, and then it didn't do anything. That's why this first 2 hours is key to be part of the stock market. The mornings are usually where the bulk of most moves are. You get that first F1 breakout followed by a huge rip, and then sometimes the rest of the session, it's just kind of boring. Obviously in the middle didn't do anything, and then during the close this just kind of slowly faded back. But I prefer the F1 patterns by far over trying to trade a F2 or a F3. So that was a great example of just, even though it broke down the 13 EMA, that doesn't mean a complete trend reversal on this stock. It just means, maybe a slowdown in the trend. And so there was that perfect. Let's see what RMBS is doing today. Where are you at, buddy? Old pal. Okay, so here you can see this thing just got completely hammered ever since then. So these F patterns, sometimes it's just very wise to take advantage of that morning spike. You can see here RMBS the next day, it just completely collapsed there. But on this pattern here, let's get this out of the way. There was definitely a huge opportunity to take advantage of this huge spike open. The F pattern, F1 right out of the gates, broke out. If you could catch that in time, and you could have just rode the 13 EMA all the way up towards $6 per share from about 540, so about 60-cent gain. The stock ripped almost 18% that day. ZGNX, this was another alert stock. We have this revival pattern that was formed up. This is a biotech stock that was, moving along with other healthcare stocks. I got in. I missed this F pattern break here, actually at about 2:45. Excuse me, yawning. It's late. It's about 11 o'clock. I'm at my office. But anyways, we ripped that F pattern. This was a tough one to get right in. We didn't have that much volume coming, but we did get big spikes in volume coming in afterwards. And I really liked the daily chart pattern on this stock. It was ZGNX. And so I said I wanted to get into this stock if we get into a dip. I was talking about on Foos TV. And we actually did get kind of a panic sell-off right here, and I got in at 255. We moved up to 273, and then we ended up breaking highs again. This was kind of a multi-day breakout here that actually didn't play out that well. I don't know if we have other position or pictures here, but I got out in about the 270 area. I didn't make the greatest trade, but following that Foos 4 breakout here, once this breaks out, as long as it holds the 13 EMA, these stocks can definitely move higher. And being that it broke out about 255, the next target would be, about $3 per share, which is the next whole number, as well as, that's where the previous spikes are. That's how the Foos 4 should be played. Obviously, sometimes I don't play it how I should play it. Trading stocks isn't easy. So let's take a look at ZGNX today, what happened. Post breakout, we did break out of that revival pattern here, and we didn't really do much for a while. It flagged and actually looked like it was potentially breaking down the flag, but bounced right perfectly off of 13 EMA here and just ripped for 3 days, even 4 days up here almost, and hit a high of $3.30. Buying into a Foos 4 pattern breakout, looking at it at this point right here, this is looking great. Target on this stock would be about $3 per share, which is previous highs, and ride the 13 EMA out and see how it goes. I got out around the 270ish from 255. I made something like $700, so nothing too significant. And then this thing bounced off that 13 EMA, ripped all the way up to 330, and then actually broke down the 13 EMA yesterday. And now, hard to say what this thing's going to do. It just got pretty volatile over the last couple days, but it did hit that next target of that whole number, $3. So great looking Foos 4 pattern there. But that's about it for these were just examples that just happened recently that I was trying to show you, but we're going to talk about some other things first before we get into the real meat and potatoes of everything. I have about 6 months worth of it's going to be several hours basically of great trades that I made that were using F patterns, as well as combining them with Foos 4 patterns that we're going to be talking about here in a little bit. But first we're going to talk about a couple other things, but just these ones that we just went over, we're just kind of giving some more illustrations of recent F pattern breakouts and just kind of give you a better visualization of what they look like.